Welcome back to the channel and welcome back to another weekly price action journal. So many of you probably saw the price action from the week. A lot of people got chopped up in this. I can honestly say, which I'll will mention during the narrative and the commentary, that I didn't take a trade this week. Nothing presented, and sometimes that is fine. That is fine. It's not always about how many trades can you take per week, but it's about the quality setups. That's what you want to wait for. Now everybody has a different model, a different style of trading. Mine is sort of day slash swing, if you will. More day trading, I would say, but it captures elements of swing. And for me, it's a simple case of, if my models are not there, I stay out of the market. I have no interest in just trying to force a trade, and this week was indicative of that. And we're gonna go into some elements of this as we break down the price action for the week and journal this into as this week's entry. So I'm going to start off on the daily. And the key, so we're going to do, obviously, I've annotated some of the charts and stuff like that, and then I'm going to discuss the key points and the key price levels and stuff like that were meaningful to me, just to convey what I was seeing in the markets as the week was unfolding. And now that I've taken a step back, were those things to be true? And ultimately, what key takeaways did I garner from the market that I can take forward into my trading for the weeks that lie ahead. So before we begin, let me just take a quick sip of coffee. Let's begin. Okay, so here on the daily chart, ultimately, following last week's price action, which this was Friday, we see how the market displaced lower. So we formed this SIBI here, but this one wasn't formed yet. But the market's displaced lower into CE of this BISI, or fair value gap or imbalance. And we've had a rejection to close the week. Just a small rejection, but still meaningful. And what's meaningful, because we closed from CE, this indicated to me that there's the possibility, as we head into the new week, that we could be seeing IRL to ERL protocol targeting this high. Okay, so that was one idea, sort of going into the week. Now it's important to preface anything by highlighting one key fact. So heading into this week, if we refer to the economic calendar, there was no news Monday, Tuesday, Wednesday. So that in itself, to me, was creating the narrative of a potential low probability week. We weren't going to see any news until Thursday and Friday. So does that mean that moves won't happen Monday, Tuesday, Wednesday? No, it doesn't, because you can utilize the volatility at equities open to frame your move. But ultimately, it can lead to high resistance liquidity runs and stuff, and some of which we saw this week. But ultimately, the initial sign was that from here we could be seeing internal to external range liquidity protocol. So as you know, as I've always mentioned, and if you watch the backtesting series as well, I don't trade Mondays. I like to see Monday's price action play out. So Monday's played out. So following Monday's price action, the market confirmed this SIBI here. This to me was an important SIBI. I'm going to explain why. Um, However, well, let me explain why, and then I'll put some context around it. So this is an important SIBI, because if the market is weak and is going to trade lower, and potentially we see an internal range to external range move down to this low, then in theory this SIBI should hold if the market is extremely weak, right? Um, but if it doesn't, then we could be supporting the idea of internal range to external range, the upside. So now you can see the two quandaries that I'm in as I'm looking at price action following Monday, and this is what is creating, in my opinion, the low probability market conditions, because we're between two SIBIs. Well, sorry, two imbalances, the BSI and the SIBI. So I wanted to see either high time frame crack and correlation at the lows, or an invalidation of this SIBI here to confirm higher prices. All right. So that was my real sort of premise. Now that doesn't mean you can't frame an intraday move. If I had a model that formed that met all of my criterias, bearing in mind that I believe it's low probability conditions, I would still take the trade. But I'm also cognizant of the fact that I'm unlikely to get high probability setups, because we are likely to see an element of consolidation, or certainly high resistance liquidity runs, because we're caught between these two imbalances. So, as I said, I wanted to see a high time frame correlation at the lows, or an invalidation of the SIBI to confirm the higher prices. However, if we're going to see lower prices, then I actually want to see the market have a body close below this this BISI CE. Now, that doesn't mean just because we have a body close, it's bearish. Doesn't mean that. But to me, it's the market sort of tipping its hat that we could see lower prices. Now, just because we have that body close below, if we had it, I'd want to see that coupled with some form of high time frame crack and correlation at the highs to support the idea of lower prices. But ultimately, that's not what we saw. We saw the rejection. The market traded to CE again, and then we on Tuesday, the market traded lower, purged the liquidity here, and then rejected back into the range, and closed inside the low of the SIBI. But again, the SIBI is not invalidated, nor is the BISI. So we're in low probability conditions. And so I wasn't anticipating, although the murmurings of a move did happen here, I wasn't anticipating much of anything per se, because we were between these two key PD arrays. So because of that, it was a case of ultimately waiting, and then look, we had this indecision candle here, again highlighting the fact that we're a bit of a crossroads in terms of high probability trade ideas. Again, it doesn't mean that something doesn't frame inside of that context that meets your model that you can take the trade. I'm just highlighting the fact that for me, I was cognizant of the fact that we're in low probability conditions. Therefore, any trade that I would take would be purely to low hanging fruit objectives and out. So on Thursday, we then get this energetic candle higher, with the market closing above this SIBI. Now, look, the market can reject from the upper SIBI. That is absolutely true. But because we've seen the market close above this SIBI, it does prompt more the likelihood that the market wants to trade up to this high, bearing in mind that it has respected this BISI. So once we saw that, we can anticipate potential higher prices on Friday, unless there is a move to support lower prices. Okay, but ultimately, price action following Thursday really indicated that this could be the high time frame draw. Not guaranteed, because again, the market can reverse, but another indication here is the fact that we closed above CE. So again, the market has respected the high, but I would be leaning more towards a continuation of higher prices to this high time frame draw and liquidity. Okay, so let's drop down to the 4 hour. Actually, let's just pop back up to the daily. So just to hit home the points that I was making, heading into the week, I was relatively neutral. Saw the rejection here, thought, okay, we could go higher, but I was also, mindful of this SIBI up here. Again, I don't do anything on Monday. I like to see Monday's price action form. I like to see the true week open, key price level, and so on and so forth. Once Monday closed, we now had this SIBI here, which now, in my opinion, represented low probability conditions because price action is in between these two imbalances. Okay, so it's a case now of waiting to see where is the intention. Now, ultimately, I'm going to gauge the intention from the 4 hour. I want to see what the 4 hour structure and more importantly, institutional order flow is feeding back to me to determine, are we more likely to go higher or are we more likely to go lower? Plus, I want to obviously couple all of those elements with a high time frame crack and correlation to support that idea. But let's go to the 4 hour. So again, everything that I've just discussed, all of that is part of the narrative of what I'm going to type for the daily chart. Okay, all of those points that we've just discussed, all of those key elements are going to be in my commentary that I'm going to type up as part of the daily. So it's important to take some brief notes, or you just type as you go. Okay, but following the call, following this this video, I'll type up all the elements that we've discussed. So let's just elaborate on that daily commentary, but first, some coffee. Okay, so again, as detailed on the daily timeframe commentary, market between two imbalances represented, as far as I'm concerned, low probability conditions. So we're inside this daily BISI, and then we've got this daily SIBI here. Okay, so I noted between Monday and Tuesday this high time frame crack and correlation here. Very shallow purge of the high. That in itself indicates to me we are likely to revisit that high when it's a really shallow purge. Likely. It's not always the case, but certainly for me. So Monday, market opens on Monday. We price is higher. We have the confirmation of the true week open. So we're heading into Tuesday's true day. The market trades higher, purges the previous day's high, and we see this high time frame crack and correlation form. Then the market displaces lower. Right. Now, in displacing lower, the market purges the previous day's low and also purges Friday's low before we see this huge rejection here, and then the market aggressively displaces higher, taking out the liquidity above here and ultimately setting the high of Tuesday. And furthermore, trading inside of this SIBI daily. Okay, so did this represent a trade for me? Could it have? Yes. Did it? No. Why? Because the trade formed during Asia into London, and I ultimately trade New York. Now, could I have attempted to frame a trade in London? Possibly, although I don't believe a trade idea formed for me to take a continuation of some sort. So it's possible, but I don't think the trade idea would have formed during my trade execution window. Therefore, I'm not about to go and chase trades outside of that window. There's a reason why I've defined a specific time window for me to take my trades. And if a trade forms pre that, it forms pre it, there's no trade. If it forms after that, unless it forms in a separate trade execution window, there's no trade. So the market traded lower, rejected, closed back above this high, supporting the idea of potential higher prices. Then we saw this displacement high set the high of the day. So then when we head into Wednesday, the market reprices higher, purges and takes the liquidity above previous day's high, trades higher, set the high of the day during London, before displacing lower into this BISI and ultimately through the BISI and closing below. PDA SMT down here, market rejects and trades higher. But again, I go back to my original point about low probability conditions, and these are the things that you want to highlight as key takeaways, is the fact that we overshot the BISI. Therefore, that to me is indicative of low probability conditions. I want to see the market body closes inside this. Ideally, no further than CE. But when we start to see this sort of over, what's the word? Over manipulation of price, if you will. Closing below key price levels that you don't expect it to, and then ultimately trading your direction. That to me presented these high resistance liquidity run conditions, low probability conditions. So what didn't prompt me to engage the market and place risk. So following the market trading higher but failing to take out this high at this time, the market consolidates now inside of this BISI. And I assume the bodies of the candles were approximately at, yeah, there you go, CE. So we see the bodies of the candles now respecting CE. Before the market heads into Thursday, trades lower, creates the low of the day, and then we see this following the news, probably unemployment claims, the market trades higher, purges the liquidity above the high, and then trades right back into the range before we see an open, low, high close candle here. Market ultimately displacing through, purging all the liquidity resting above, and setting the high of the day. And then on Friday we see how the market repriced lower, we could say that this SIBI now becomes an inversion fair value gap. The market trades down into CE, body of the candles respecting CE, and then ultimately the market trades higher, purging the previous day's high, say the high of the week, and then we see a level of consolidation towards the end of the week. So if you note the key things from the week, that to me emphasizes low probability conditions. It emphasizes that, and that's why as much as there was no model for me to trade, there was no real high time framework as far as I was concerned that I was happy enough to utilize then to go and frame something off it. And so fortunately, the market conditions to me just did not represent high probability conditions for me to place any risk. So key things then, as you note from the 4 hour, one of the key things to take away was the fact that, again, for me, there was a lot of market symmetry. The highs, the lows, across all three members, there was a lot of market symmetry. And again, where there's market symmetry, that for me, if I'm looking for a cracking correlation, is not going to be conducive of the elements that I need in order to frame a trade. So again, hence one of the reasons why I just sat on the sidelines and just waited. Okay, so that's the H4. We'll touch on the hourly, but there's not really much to discuss here, bearing in mind that the market didn't really provide me with any high time frame context, or framework should I say. It provided context but not so much framework. Therefore it's not there isn't much, if you will, to discuss. So again, with Monday, ultimately, I mean, we can see the market opened, set the London high before trading lower and setting the London low, and then we see this consolidation before the market purges the lows, sets the low of the day, and then we see this displacement higher, whereby price ultimately traded back into the BISI, finds support again. We can see the bodies of the candles respecting the high, and then ultimately trading higher. So we trade higher following support here, form the SSMT, or the SMT with YM, before the market displaces lower. And you know, as I said, fortunately, no trade idea for me, although I mean we've got the high probability order block here. So potentially, if I was trading the London session, possibly, but ultimately the market displaced lower, purged the previous day's low, set the London low, before then repricing higher back into the CB. But again, look at the bodies of the candles. Now you could say, well, we've got this wick here and wicks are imbalances. It is true, but I'm looking for the market to find a level of support to see the market go lower. I don't want to see this sort of overshoot the imbalance, but the market does, and then ultimately immediately reprices lower aggressively, sets the low, which ultimately is the low of the week, before then aggressively repricing higher and purging all the liquidity, resting above everybody's high. So then we ultimately come to Wednesday, where the market ultimately is consolidating all the way through the open. The market is pretty much consolidating. Sets the high of the day, which ultimately would be the London high. Then sets the London low, kind of like an OTE entry there, if you will. Then the market trades back into the range, so a premium of that range from high to low, and then displaces lower. Displaces lower into the H4 BISI, overshoots that as we saw. I note the high time frame cracking correlation here, but nothing to frame off it. It doesn't really meet my trade model. Before the market pretty much consolidates for the rest of the AM session, and then we see the market pick up and ultimately support higher prices and displace higher and set the high of the day. Okay, so then we head to Thursday, and again the market opens, trades higher, sets the London high. This is just a H1 liquidity pool. Again, I wanted to see a cracking correlation. Not there. I'm gonna mark that because that's not the London low. The London low is here. So it sets the low of the day. Then we see this displacement higher, purging the BSL London and the previous day's high. Ultimately, at the time, setting the New York high, of session high. Market then rejects aggressively, likely during news. Pretty certain it's during news. Dresses aggressively. And falling short of the previous day's low. Certainly wanted to see a purge of that. Before then, the market rejects again from the BISI and trades aggressively higher through the BSL New York high and all the way up to set the high of the day. Okay. And then we see the market reject and just trade back inside the range and consolidate. And then again for Friday, we have obviously the BSL, the Asian range high. Market creates a H1 liquidity pool, fails to take out. The Asian range high at that point, and in fact probably got okay. So we have that. Bear with me a second. Before the market displaces lower. Okay. And purges the SSL H1. Trades down into what we could now class as an inversion fair value gap relative to the daily time frame. Does not purge CE, finds support, and ultimately reprices aggressively higher during the into the New York session, and then we see this aggressive displacement higher. And then the market ultimately just consolidates for the remainder of the day. So as you can probably gauge from an hourly standpoint, yeah, that probably some moves in there, but nothing, as I said, for me to really frame something that I'm confident in placing risk. And so there was nothing there for me. But again, maybe there is for other traders. But I'm not comparing myself to other traders. You hear that line, it's you versus you, and that's exactly what it is. And so for me, this was it's a challenging week when you don't engage the market, but at the same time, it teaches you discipline. And for me, this was all about discipline and patience. So everything that I've discussed for the days, that's going into my commentary for each day. Just a couple of lines, nothing too elaborate. Just of broad shoulders of what had happened during the day, and then I'm just going to note down my key takeaways from the week. So again, one of the key takeaways that many of you may want to take from this episode is when prices between two high time frame imbalances represents low probability conditions. Doesn't mean you can't take a trade, but the conditions are low probability. So we want to see signs of where institutional order flow is going to resume, either to the upside or downside, and then get in line with that. One of the key telltale signs of that is going to be, if you use the daily time frame and the 4 hour time frame and its imbalances supporting price higher or not. So again, we're going to wrap this one up here. Hopefully you've taken some value from this from this walkthrough. As I said, make sure you get your commentary for the key time frames. I would say are the daily, 4 hour, maybe even the weekly. They're the key ones, but certainly get some notations for the hourly. And again, make sure you document within the journal entry your key takeaways from the week, which is going to help you focus your next points of learning and development to improve as a trader. So hopefully you enjoy this one. Hopefully you took something away. And I don't often say this, but again, if you've taken something away from the channel, please, from this episode, please give it a thumbs up. And if you like the content and you like the information, why not give us a follow? But with that being said, I'm going to leave it there, and I will catch you guys in the next one.